Hey, welcome back to Two Stupid Guys Try Socks. I'm Dylan.
And I'm Vinny. And my guys, what is going on right now in the market is pretty interesting. And when you see opportunities like this because of turmoil, what are you going to start doing? You're going to start sharpening your pencil and try to figure out when you want to buy these stocks. We're going to take a look at some companies that are very interesting to me. And I'm trying to figure out when exactly I would start pulling the trigger on buying these. All right. What do you
Shopping
think?
list, if you will.
Shopping list. Yes.
Um,
Very, very much requested from our previous video.
yes, there are three ways, kind of, to determine when you want to buy a stock that you want during a crash. A crash is a very emotional time. So we're going to show the charts at the end of this, but you can go full just math wise, which is what Vinny's going to show you, just a free cash flow yield of a certain percentage. You can go by lines of resistance on the overall market health, so SPY or Qs, or lines of resistance on individual stocks. So we're going to show you all of them.
Yeah. Hey, like I said, you share and see headlines like this talking about stock market crash 2025, percentages are taking off, all this turmoil because of tariffs, and now the Canadians are slapping tariffs on the Chinese, or vice versa. I don't even know what's going on at this point. But either way, that uncertainty creates opportunities. Okay, and this is when you start doing your research and really figuring out what exactly you want to buy. So these are just a little smattering of some of the headlines I saw just from like the last couple of days about stock market stuff here. All the gains are gone, and it's doom and gloom. Yeah, whatever. But I always try to remember this. All right, it's better to pay a wonderful or buy a wonderful company for a fair price than it is to get a fair company at a wonderful price. All right, so when we're looking at wonderful companies, people want to look for these obscure investments, and sure, there's some money to be made there. But the wonderful companies are the companies, the first ones that come to the top of your mind. Okay, you know these names; they're household names. They have their own agencies practically at this point. They're sexy companies. That's the ones we're going to look at.
Can you hit a home run with an obscure, I don't know, crypto? Sure. But the amount of
Yeah.
home runs you have to the amount of failures you have, these would be safer. We're trying to be non greedy with these.
Yeah, and people will talk about the fact that you can't buy these companies at great prices or because they're so well covered. That's complete garbage. Okay, my cost basis on Apple is like $40 a share. My cost basis on Google is like $100 a share. My cost basis on Meta is like under $200 a share. Those are some of these wonderful companies and that I've bought at good prices because I've taken advantage of the opportunities that have been presented to me over the last several years.
Yeah,
And maybe we're getting more. I don't know. Cocky, arrogant Vinny coming out over here.
we will see.
All
Cocky,
right.
arrogant.
Spy. This is the big 500 companies, right? But like, oh, yeah, as we talked about before, like 30% of this now is like the Magnificent Seven, right? Triple Q
48.
even more skewed, right? We're getting like 50% of the Triple Q is now Magnificent Seven. And then now you have the Magnificent Seven them directly themselves. You can actually track it on CNBC if you're so inclined. The chart only goes back 2 years here, but yeah, it's an even steeper climb than those other two because those are over 5 year time periods. All right, who
Jeez.
makes up the Mag Seven? All right, like so, these are the household names. This chart right here is actually from June of last year, but just showing you how ridiculous the performance has been. All these big triple digit or quadruple digit numbers in terms of percentage growth over a 5 year period, which is just blistering growth. You can't ask for too much better than that as far as stock returns. It's just these things are the long term compounders that will create generational wealth, right?
Right. Man, Tesla's numbers on that was insane.
Yeah.
Jeez.
So what I looked at here, all right, I do want to pick amongst these seven and look at which ones have what level of growth, and then kind of parse that down in terms of I want to see top line growth, bottom line growth, and then how valuable the company is in terms of the price. How much am I paying for that growth, right? So these are the kind of metrics that I look at. So we have the 12-month revenue growth, right, for each of them. We have the 12-month EPS growth, and then we have this trailing 12-month free cash flow yield. Now, free cash flow yield, it's got plenty of issues. In particular, right now, we're going through this massive investment cycle, right? And a lot of their free cash flow is being eaten up by, see our other videos talking about the tens of billions of dollars each of these companies is putting into their AI infrastructure, right? So that's significantly going to impact their free cash flow yield,
Yeah, it's going to
right, Dylan?
change the number a little bit.
Yeah, but still, it gives me an idea of like how expensive they are compared to how much cash they generate over the last year. which is a major metric. Ultimately, when I look at buying a company, I'm looking at what are my investment dollars going to be for return. And there's a lot of different ways of looking at it, parsing it out, but that's how I basically approach it. Um, so when I look at breaking down like the valuation of these companies here, there's a couple different ways. You have many different ways, but they're really coming down to absolute valuation. You kind of get down to this core number. This is what I think the business is worth. You can do things like sum of all parts valuation in this metric, or you can do relative, where you're looking at how are they compared to their peers. Right? So this chart right here that we just went back to will give you a very good relative valuation, because these are all major tech companies, and you can certainly look at a glance here, look at this trailing 12-month free cash flow, and see which one of these tend to be more or less expensive than the others, right? And Tesla's like the most expensive one on this chart here. We have Google and Meta tied for the cheapest on this chart right here. Ooh. According to this, because higher number is better when we're talking about a free cash flow yield. All right, so these are my quick checks. All right. When I buy a company, I want to see at least 10% revenue growth and EPS growth of at least 10%. Now, EPS growth is they can manufacture that with share buybacks, but revenue growth is important. I want to see there's a lot of other things you can look at in the company, make sure that they're not cannibalizing their themselves to maintain growth by cutting into their margins. But the headline numbers, these are things really good. And I like to get at least a 5% return on my money. Right. So right now, right, cash is earning 3.7%. I want to say in a high yield savings, you can get 12-month treasuries, so like 4.3% right now. Yeah. So I would want to be earning at least 5% in trailing 12-month free cash flow on my investments into stock, which are a much more uncertain thing, if you will. All right, so when we look at the Mag 7 and then use these criteria, that kind of filters it down to us. For now, we're down to like the Mag 5. All right. So Google, Amazon, Meta, Microsoft, and NVIDIA all meet that metric, right? So the next thing I did is I looked at what would the price per share be to give me that 5% free cash flow yield I want. So that's how I rose at these prices right here. All right. Could do a step further and kind of look at what percentage decline would have to see to get there. Whether or not these companies are achievable. That. Yeah, we'll look at it on your charts here. The only other kind of caveat I wanted to add here is that it's very much that free cash flow yield that I calculated previously gives you a good kind of, I want to say here, sniff test in terms of whether or not it's going to be close, because obviously Google and Meta having the highest free cash flow yields are the closest in terms of percentage decline required to get to this 5% free cash flow yield price.
Yeah, and it is important because, look, everyone's spending a lot on CapEx. So that is going to change this a little bit. There's no correct way to get these numbers. It's just when you have a crash, which I'll show you right now, it's very emotional. There's no more logic. People start selling everything. In reality, if you have money aside, it's usually the best time to buy following the next 5 or 6 years minimum. Yeah. So if you do have cash aside, I feel bad saying be happy, because a lot of people won't be happy, but do your best. So here's the SPY. So the way that this works, I know this is a lot of lines. It's kind of scary. Mm-hmm. Red, strong support. Yellow, pretty weak. Now, one thing I want to add here. Okay, let's say that we are in the past, okay, and we are on this day right now. Okay, so we can't see anything going forward. This is just how good these lines of support actually are. So this red one. So we're going. You can see there's a lot of hesitation here. We hit here. Imagine that you're down this day and you're trying to figure out, okay, are we going to bump up here? You literally hit almost to the dollar and come back down. These are very emotionally strong supports where other traders are look at these. Let's say we're going up here and we have, oh my gosh, another correction. To the dollar. We hit and we come back up. So it looks a little chaotic on these charts, but basically the red is more hits, the yellow is less hits. Yellow is always going to be towards the top because we have less history, because we've been going straight up for like ever. So kind of hard to have closer hits here. Baby. Actually, this would be kind of cool. Let me switch to a weekly chart and just show you how disgusting this is. It's just constantly up. Mm-hmm. I mean, what are you going to do with that?
Yeah, I love it. You're going to buy. That's what the whole point of this video is.
Exactly.
Buy more.
So Qs, same thing. we have a little bit more to go. We're at the 200 average on the Qs, which is, I mean, that's like the strongest support. You can see this blue line, 200 average, hit, almost hit, and these are all bounces upwards. So depending on where we go, I'm going to zoom in a little bit so we can actually see where we're at. We are literally right there. Okay? There's no way to tell the future here, but we are literally at the 200 average. So in terms of these lines of support, once again, let's say that you couldn't see the future, you're living right here. This would have been a solid short. It's right where we hit previously. It's pretty awesome. This would have been a solid ad as we're going up. They hit these values multiple times is what I'm trying to say. It's pretty cool, right? Like, imagine just like being right here and you're like, all right, it's looking very bullish. It hits to the like penny. Like it's unreal. It's crazy.
Yeah.
All right. So let's go through the stocks that Vinny looked at. This is Google. Ooh, at the 200 moving average, right below it. We're chilling right there. Blue is your strong supports. Red is Vinny's price. Okay? So red, Vinny price. Blue, white, depending on the resolution here, strong supports to add on. If I could get any point across that this is for me, this is for no one else, I severely messed up on Meta because I got greedy and I didn't do what's called scaling in. So if there is a big crash and we have at least some hesitation at these prices, comparison is a thief of joy, right? You're going to have one of our commenters would be like, I added the perfect cent. What did you guys do? Right? Someone's going to say it. Probably not ours. We have nicer people. But other people are going to say that, right? If you add at a specific price and, you slowly scale in, you can't go wrong. You're going to have people that add to the perfect dollar. Who cares? It's your account. Just do the best you can, right?
Yeah.
So let's say we come down here, once again, to the penny. Oh, this is so sexy.
What is that? What level?
This is 147.78.
Okay.
All right. 147, 130. Yours is 114, 100.
114.
Got it? So
yeah, I like it.
147, let's say we hit this, but the SPY and the Qs are mid-crash. Guess what? This level is not going to do shit at all. Because as the entire market is crashing, it's not going to work. It's just going to go through it. But if we have hesitancy, I mean, that's not a bad ad, right? 147 for Google. When you're looking at a 5% yield of 114, that's with them spending a bunch of money. That's not a bad.
Yeah.
That's not a bad call. Right? I'll add a little bit there.
I agree.
Amazon is worse. Amazon. It's not as good.
The point of those numbers too, it's not to make it the largest number of stocks that you can possibly buy. I want to caveat that.
Yeah.
When we calculate that 5% free cash flow yield, it's about taking fewer swings that have a much higher success rate. Okay. So you may never own Amazon. I don't own Amazon, and there's a reason why.
Yeah. Well, I mean, comparatively, the last 4 years, it has been chopping around quite a while, which could be a good thing. But once again, guys, at the 200 moving average, it's like right there. We're like within $1. Okay. So another decision point. These are all kind of convoluted, but if you look at them, look, beautiful hit, hit multiple times. So these values are 186, 170, 148, 131, all the way down here, 62.
Yeah.
I don't know if that one's going to happen.
Probably not.
Yeah, Amazon during bullish or bearish months has gone up less than fellow competitors, also down less than fellow competitors. It does not move as much. So
it's interesting to notice.
Meta, much more realistic, right? We have these beautiful hits at 544. This is probably one of our strongest stocks so far. They're actually at the 100 moving average. They're not near the 200, but your values are 544, 490. Vinny's is at 428. And then in case something insane happens, man, Meta at 330.
Yeah.
I would drop everything I had. That'd be great.
I know. One of my greatest regrets is when Meta was like at 100 is not like taking out cash advances on my credit cards to buy
I know.
it.
I don't know if I do cash advances, but yeah. Um, Microsoft is looking like it's in the worst shape. We are below the 200 moving average. We're actually at the first support where I don't know if I would buy here with the whole relative market. I would probably jump all the way down to this 340, 314, 291, 244. Vinny's value is at 187,
Yeah.
right?
That one's
Now,
also not likely to hit. I mean,
not
I
likely to
own,
hit. I think if there is a crash, we can get here 314,
yeah,
291. It's
maybe.
remember these values are useless if the SPY and Qs are tanking, right? They decide these are, you know, they're big fish, but the SPY and the Qs are whales. So they're ETFs of everything. If they're crashing, these values are not near as important as the SPY ones we looked at earlier. And then
Very
let me
fair.
do. Oh, this one's the worst one.
Oh,
Yeah.
yeah.
Um. So unfortunately, Nvidia is just a straight line upwards. So all of these are pretty weak. They've all only hit like three times or two times.
Mhm.
Once again, it's kind of hard when like the stock just gains $20 every 3 months. So, you know, Vinny's value is down here. 75 would be amazing. 90 would be amazing. Honestly, anything below 100 is pretty incredible. Their
Yeah.
free cash flow yield on yours is it's a little bit deceiving because they go up so much every quarter. So next quarter that number is going to change. So, you know,
It-
with a grain of
yeah.
salt.
This is definitely not like the best metric for evaluating a company like that. In fact, I may have to do individual NVIDIA DCF in order to kind of find a better number for NVIDIA because it's a company I absolutely want to own, but does it work well when the company's growing 100+%? Like, no,
Yeah.
it's not a useful metric at that point.
Just everyone do the best they can. Here's the cues just one last time. 449 was pretty decent. 421's weak, and then your 400, 380.
Yeah, absolutely. Yeah, if anyone has like their own individual model for pricing Nvidia stock, like I'd love to take a look at it and kind of see what you're thinking as far as like buy prices in a downturn here or a
Yeah.
stock market pullback because it's a company I absolutely want to add. I just want to add it at the right price.
And these values are for when you look at those crashes, these are emotional times. These are not logical times. People freak out and then stuff just gets, everyone, well not everyone. Bad people just kind of freak out and sell their entire portfolio because they're trying to time
Mhm.
everything. So if you just slowly scale in, there are other companies in here that I would look at like Costco or Target. Usually in a downturn, retail gets hit horribly. So,
Mhm.
Target at a really low price would be pretty sexy 5 years from now. Not now. You don't like
Yeah.
Target?
No, I love Target. They're already at like a PE of 10 or something like that.
Yeah, they're
They
pretty
trade
low.
pretty cheaply, and they're largely recession proof, which doesn't really make sense. I mean, sure, they make more profits on a higher margin items that are not recession proof, but they're not going to zero, right? Target and
Right.
Walmart and Costco, those are companies that everyone needs on a regular basis.
Yeah.
So,
All right, guys. Let us know what you think. Add it to your shopping list.
yeah, catch you next one.